Hey guys, it's Rombo here, and today we're going to be starting kind of a little mini series on the indicators that I use. I've had a lot of people ask me what they are, what they mean, and so I thought I would kind of go through them in a kind of a step-by-step order. I've got a lot of them, so what I thought I'd break it down to is my ones that I paid for from Fun Think Script, and then the free ones, and what they mean, how you could use them, and then probably the most popular is the deviation trend lines. I'm gonna just solely do one video on that, show you how to set it up, and don't worry, I'll be going over a lot of our charts also. I'll try to get a video out maybe tonight or tomorrow on some of the charts that we're following. So I will be doing a preview on a lot of those for this upcoming week, and maybe even going over some swings, potential swings for this week also. So, but today I'm going to be looking over the wolf wedge, Robert's regressions polynomial channel, and the Mac divergence indicators. And all these you can find on fun with ThinkScript.com. I'll put a link down below. Please use that link. I do get a percentage off of my next purchase and all that good stuff. If you do buy through that link, I'd greatly appreciate it. But if you don't, it's okay. But it would be nice. It'd be kind. Thank you ahead of time. So the first one that we'll be looking at is what they call the wolf wedge. The wolf wedge is basically right here. I have this up. This is on CCI, Crown Castle International. And the idea behind this study here, and this is kind of weird because we have two of them back to back. That does happen a lot when we're in consolidation here. But a bullish wedge is formed where you have this first point right here, and we have an uptrend, and then we have a downtrend. That's the second wave, and then the third wave comes up here. So now once we get a bounce right here, now a part of the algorithm or the script senses this as a trend line right here, and then the third wave comes up and stops and bounces back down. So then that sets this right here. And then part of the script looks for this kind of action. And then once you get the fifth right here, then it forms this wedge and it paints on the chart so I could see this. Now the strategy is you draw a line from point 1 to point 4, and you see this dotted line right here. I'll zoom in here a little bit. It forms this dotted line, and what you want is a really good, now this isn't the best, there's rules to how you follow this, but the best way to look at this and to play this, part of the rules is let's pretend the second wave comes down here instead. Okay, now this is what I'm trying to show you, the rules that you follow. So here's the wedge right here. Let's say it comes down here, it comes down here. Don't pay attention to this right here. What you want now on the fourth wave, this is the fourth wave, is you want it to break this wedge. Okay, now it technically it did right here. Okay, but I'm telling you the rules and what we want to look for a perfect trade. I wouldn't trade this, and I'll tell you why in a second. You want the second wave and the fourth wave to be parallel with each other, somewhat. You know, if it's like this, that's fine. But if it's like, you know, crazy, like this or like this, you know, you don't trade that. And then farther it goes down below this wedge, it's like a rubber binder effect, I call it. Farther you stretch that rubber binder, farther it's going to pop up. Okay? And this move right here is called the bear trap. Because it's tanking, guys are shorting. And then what happens is after it settles and breaks and rebounds, then it comes up. And it breaks through the bottom wedge, and the line between 1 and 4, this dotted line, that's what they call the target line. So that's the prediction of where it is here and where it will eventually get to. Okay. So another rule is you don't want this wedge. Let's complete this wedge here. One of the rules, beside it being parallel and breaking below the wedge, is that this whole move right here is completed and you still have space between this move and the end, because the end of this wedge right here is the actual timeline also to where it will hit the target line. Okay, so if this comes all the way out here, it's already past the wedge. So I wouldn't, if this move down here comes down here and goes past here, I would not trade it. If it's really close, this is actually too close, I wouldn't trade it. The ignition candle, that's the nice thing about this also, when it makes the move up, it will have a dark blue and it will change it to a light blue. Now you can't see that because of this other indicator I'll be talking about later, the profile volume indicator. So it will give you ignition. Now what you want is the ignition candle to be down here underneath the wedge. That's kind of your buy-in indicator. Okay, and this is a rule also. You want the ignition down here. You don't want it within the wedge. I would not take that. Okay, but now the reason why again you don't trade it this far down, because you just don't have too much time left. Sometimes, yes, it does hit. This one did not go below the wedge. I have ignition in here, not a lot of time left, but look, boom, it hit the target price, didn't it? So sometimes it does, sometimes it doesn't. But again, if you're consistent with your rules, then you'll be consistent with your trades. Again, even when you have a perfect wolf wedge setup, it doesn't work all the time. 60% of the time, 65% of the time it does on a perfectly played, laid out wedge. If you play consistently, you go according to the rules, it will hit that price target before or close to the target point. That's what I really like about the wolf wedge. It's very good. It helps you spot trends also. It's customizable. You can change the colors. Like for this is what we call a bullish wolf wedge, because basically what it is, it's a descending wedge, which is a bullish wedge. An ascending wedge is a bearish wedge. And now, speaking of which, here's a bearish one right here. Now this is again something I wouldn't trade because it's more of a channel than it is a wedge, but this is probably just barely coming down to actually use it as a wedge or identify it as a wedge. But look how bad this is. Now these are parallel right here, but the fifth wave doesn't get past here. And a lot of times when I see this show up, a lot of times the fourth wave right here on a bullish wedge, or I'm sorry, a bearish wedge, this can really take off. I mean, really go up. So I'll scalp that sometimes, but you have to be careful because this is the bearish wedge, so this is the bull trap. Just like down here, this move here, this is a bear trap. Well, this is the bull trap. It lets it run, and then all of a sudden, boom, this. Okay. Now this wasn't a perfect setup by any means either. If I was shorting this, I wouldn't trust this. But here's the ignition right here. It does automatically give you a stop also on this. It gives you stop right here. So that's really nice. But we had ignition candle, and then boom, there's the bearish price target, and it hit it more. So that is the wolf wedge. It does also come with the scanner, so you could scan for bullish wolf wedges, bearish wolf wedges, and it's really really good. And you could find that on funwiththinkscripts.com, and that's the wolf wedge. It has also kept me out of a lot of trouble. Also, we're having a nice run up. Let's say we're in here, and then I see it forming this wolf wedge here, a bearish one, or let's say I'm not in it and I'm looking at it. I'm like, man, this is going up. But then I see this form. I'll just wait and I'll be patient to see if this looks like it is going to go down, and sure enough, boom. So instead of getting in, hey, this looks like it's going to break this resistance. I'm going to get in, and then suffer that big loss right here. This, when I recognize a bearish wolf wedge forming, it just helps me to be a little bit more patient and get out of a bad move. That's helped me out quite a few times. Robert's Regression Polynomial channel. This is another one from Fun with ThinkScript. This is this line right here, the red and green one. That's wavy with this red line in between. Okay. The red line is the average price of the stock, and this the green is just this goes off the average trading range, guys. Okay, so this would be the buy zone for this day, and this would be the sell right here, and then this right here would be the sell zone. And if you notice, it got really close right here, and boom, it came down. And the part of this study is you sell it when it gets in this area, you buy it when it gets in this area. Look at this, hit this area right here, and if you would have gotten in when it hit that buy area, look at that move, huh? So this is a very very good study. Also, it just kind of gives me a general idea of where we are at in the day. This is a multi-chart. Right now, this is on my daily chart, but I have it on my 15-minute chart. I have it on my 2-minute chart also. So throughout the day, if I'm just trading it in the day, this is what it looks like for during the day. If I'm scalping, I would have waited, might have bought here, probably would have sold there. And I would have waited here. I would have bought here, got out here, bought here, got out there or here, and probably would have bought right here. I might look at this for Monday. That might be good. So that is that's the Roberts Regressions Polynomial channel, and again we could find that on Fun with ThinkScript. And then the last one is right here. It's called the MACD divergence. This is the lower study, and then there's the upper study. let's see if I have it on. Well, I changed my setup, so let me change this here real quick. Sorry, there's no editing here, so I'm sorry about that. And here's the MACD divergence. Okay, now the MACD looks for two different things. Oh, look, I have two examples on here. It's looking for the trend right here of the MACD is high, and it's pushing a lower high and a lower high. But at the same time as this is going down, we see here the price is going up. So there's a divergence between the two. Okay, it measures that, it puts it on the indicator, it automatically puts these lines on here for you. You don't have to worry about that. You notice that. You can scan for that also. Okay, and this example, if it's going up on a divergence, that means that there is a trend change coming very quickly. And if we notice, yeah, there sure is. Look at that drop right there. Okay, so again, if I'm getting all excited and I'm thinking about getting in and I see this popping up, I'm going to wait. Okay, or if I'm in, especially if I'm in and I'm seeing this come up. And with the combination of being up by the buy zone here, or the sell zone, I'm really, this is going to help tip me off to, this drop. Or it doesn't always indicate drops, but I mean gap downs, but slight drops like this. And then here's another example of a bearish divergence here. So the MACD is going up right here, or the negative is getting less and less and less, formed by this blue line right here. There's actually two of them. These lines go off of not only the moving averages, like right here, but it also goes by the MACD right here. And then it sets up this line right here. So this is going down very, very slight, and this is going up very, very slightly. And look what happens. You get this upturn right here. So that's a bullish one. And this went from $1.90 to $1.98. So that is the MACD divergence. And that, again, is on the Fun with Think script. And again, I'll put the link down below if you guys like these indicators. And I would say within the next couple of days here, I will be going over a lot of my free indicators that I use. Just a little, I guess, preview, I guess, or teaser is the hot zone RSI indicator. It looks, you have this white line here is just your RSI, but at the same time, what it's doing is, now we have, this isn't a good example, this is the volatility. And what it is really looking for, now you could use it for buys right here and sells up here, but it's looking for high volatility and the RSI being really low. It gives you it gives you some, well, here we go, perfect example here. It's down here. The volatility is up really high. It gives you these red dots. That's called the hot zone. That usually indicates the price going up. Here's some examples here. Again, here's a red dot. That's a hot zone right here. The RSI is under 30. The volatility is over 70 right here. And look at that. So that's one of my free indicators that I'll be going over. Well, I just kind of did right there. But there's quite a few other indicators that we'll be going over on my next video. And again, I'll try to get that out within the next couple of days. And I explain a lot of this stuff on the Discord, on Moon Market's Discord, in our streaming thread, which we do just about every, we do every day, Monday through Friday. answer questions. We go over hot, tickers that are going on and things like that. And we are starting up a fun little day trade, or I'm sorry, a week swing little study, and we're picking some stocks to just put in some money and see what they do during the week. So all kinds of fun stuff going on in there. It's just a great, really good family there in Moon Market's Discord, and we're all excited about that. I hope that you guys are enjoying these videos, and please, if you like them, give me a like. That helps me out, and subscribe, please, if you like them, and comments down below. Give me some ideas or suggestions, and I'll be glad to look at those later on. And with that said, I hope you guys have an awesome weekend, and we will be seeing you later.